This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose, your last daily dose of market wisdom with Nick Santiago, master trader. I'm your host, Kerry Lutz. Today is 131-24, show number 561. Maybe we should make it show 666, Nick.
Maybe we should, Kerry, but that's about the amount that Google is down right now, percentage-wise.
Yeah, I wonder, where do they come up with these numbers, Nick?
You can't make this up. So the stock is down $9, and I just saw 99 cents, and the percentage was 6.66%. You can't make this up.
Hey, wait, this is the company that their credo was do no evil, right?
Oh, yeah, do no evil. But we know that these guys have been fudging, search results for a long time. They've been, maneuvering videos for a long time, shadow banning for a long time. But hey, it's the last show. We may as well get it out there.
I love it. I love it. Hey, so Google, mark of the beast, is getting nailed. What's going on with Microsoft and AMD?
Yeah, you got Google down. Microsoft is lower as well. That's only down 1.28%, $5 decline. Not a big deal because Microsoft was a bit overbought. But you also have AMD lower as well. And they've been a hot ticket lately on the back of this AI. That's down nearly 4%. So you have Google today down 6.6%. You have Microsoft down 1.25%, and AMD today taking it on the chin as well, down about 4%. And that is causing a nice sell-off in the NASDAQ, which is lower by 1.5%. So the NASDAQ starting to come back in after, making new all-time, not new all-time highs, but making new highs. NASDAQ has never exceeded the 2021 high yet, but the NASDAQ 100 has. So there's a divergence right there that should be noted. The composite has not made a new all-time high, but the NASDAQ 100 did. And both are down today, the NASDAQ and NASDAQ 100 by about 1.5%. So ugly sell-off in tech land today.
All right, so I'm going to draw an analogy here. It might be a little tortured, but just like gold has reached new all-time highs, but silver has lagged and not been able to make, it's still never been able to make its old high. That's kind of the S&P and the NASDAQ, right?
Well, I think it's more like the NASDAQ and NASDAQ 100 because the S&P is making new highs now after 2 years from 2 years ago. So the S&P has made new highs. But yes, it's the same thing as the NASDAQ and NASDAQ 100 and gold and silver. You could put that in the same category. Silver has not made new all-time highs yet, but it's sitting around $23, Kerry. So it's not that bad either.
Yeah. Yep. Definitely has some real value there. So regional banks, again, under pressure.
Yeah, regional banks today. This is a pretty interesting story. So they're down about 3.5% as we speak. They've actually come off the lows, but it looks like New York Community Bank earnings were really the problem today. It looks like that stock has gotten absolutely annihilated. In fact, the last time I checked, it was down about 35%. So that's the real story there. I believe it is even below the crisis low. So that's something to watch for. Now, this gets better here because it looks like that bank, I believe, did buy the deposits from Signature Bank. So last year when Signature Bank went under, I believe it was New York Community Bank that bought the deposits. So that is talking to us a little bit. And that tells us that the Fed really injected a lot of money because that problem was really, really bad. If they're still suffering here, and this stock is down 35% today.
Okay, well, hey, like you said, like the dinosaurs, so go the banking industry, right?
Oh, yeah. You'll see more consolidation, I'm sure, as we go through the rest of 2024. You'll see the central banks providing liquidity throughout the rest of the year. And, that makes for higher stock prices. Liquidity is the secret elixir that makes the markets go up.
Right. Hey, so FOMC is meeting later today?
Yes, big Fed meeting today, the Federal Open Market Committee. They're going to make their interest rate policy decision at 2 p.m. As we said before, Kerry, they're not going to do anything. They're going to keep the Fed funds rate right at 5.25%. They'll jawbone the market on the statement, and we'll see the reaction in the stock market. But what will be important will be the verbiage from the Fed. Remember, Jay Powell at 2:30 p.m. today will host a press conference where he'll actually take some scripted questions, and we'll hear what he has to say. But the bottom line is, the Fed funds rate is at 5.25%. The 2-year Treasury note yield is around 4.3%. The Fed doesn't have to do anything. They have wiggle room at this point in time. So I think we're just going to see the Fed sit pat. And, maybe in the March meeting, they'll get a little bit closer to cutting rates, even though I don't expect it then either. I think probably June would be when they would actually do a cut, if any.
Well, I think we mentioned that the fact that once they became dovish, rates fell on their own.
That's right. Yes.
Just gave them a lot of breathing room, right?
It did. It gave them a lot of breathing room. And these guys are not dumb. I know some people, continually say that the Fed is a useless organization. They're stupid. These guys have a lot of market people around them. They have mathematicians, statisticians, MBAs, PhDs all over the place. They're not stupid. Jay Powell is, in fact, a market guy, right? I believe he worked for Carlyle. He ran a fund for them. So, you're talking about a guy that's pretty seasoned out there. And, they know jawboning is the number one tool.
Yeah. And in this case, they jawboned the rates up so high that they were probably, everybody just kept expecting a raise, that once they said we're not raising and we're going to cut, that was enough without doing anything else to just bring the rates down to where they should have been in the first place.
Yeah, and to add to that, Terry, remember, he did it in December when no one was expecting that, including myself. So he went and became dovish all of a sudden in the month of December. And, the market immediately priced in 3 rate cuts. Now they're pricing in 7. I think that's a little far-fetched because interest rates, surprisingly enough, are not going to go down that much. So, we'll have to wait and see how this plays out. But that's up for as long as the geopolitical events don't pick up too much, sets up for, a positive 2024 right now.
All right. Well, hey, wonders never cease. So looking at gold today, up pretty nicely. It's pulled back a little bit, but still going pretty in the right direction.
Yeah, gold has been starting out pretty strong, and then it seems to fade. Today, gold started out really, really well. Now it's starting to head back down, only up about a little over 0.6%. So, we'll see where it finishes. But one thing I will say about gold is that every time it looks like it's going to roll over, it seems to catch a bid. And that is talking to us a little bit. Now, the breakout doesn't occur until we close above 2,100 on a monthly chart basis. So again, today is the end of the month, so we have to wait till the end of February now to see if gold is going to break out. But either way, the trend is still up in gold, especially on the larger time frames. Gold is stronger than silver, and it's hanging in there very, very well. And the more uncertainty we get in this world, the more people are going to flock to gold. As you know, central banks around the world are buying gold. And you also know that the public, when they can, also wants to buy gold. And institutions are buying gold because of all the uncertainty. And then you got an election year that could be one of the most chaotic in history in the United States. And there are a lot of other elections going on around the world this year as well. So, I really have a hard time seeing gold really break down unless it really took out some key levels, like say the 200-day moving average or something like that, which is right now at 1977. The price of gold is at, over 2050. So, we're still quite a distance from there. So really no problem for gold. It just hasn't broken out.
Right. Hey, finally, erstwhile cryptocurrency, Bitcoin has had its bounce, huh?
It's had a great bounce from the level we gave out right here on this program about a week ago. So, crypto has reacted as expected today. It's pulling back a little bit. If you own crypto or you did buy it from the bounce that we mentioned, and again, I think it was 39,600 level I gave out on the program, and that happened, basically around the 22nd, 23rd of this month. You've had a really good bounce here. So protect your trade and try to ride it up. There's nothing bad here with today's little pause or pullback. And, but protect that trade. Don't let it go back against you, because if you do make a lower high here, you'll probably retest those lows again. And then if it breaks those lows, there could be problems.
All right. Yeah, I've held off selling. I knew I should have sold at 47,000 and then played it back up again, because it just reminds me, there was a stock in the 60s called New Thomas. I think it was a petroleum stock. And basically swing traders, because in those days, if you were in and out for the day, you didn't even have to put any money but into the stock. You closed out your position and you took your profit or you paid your loss. So there was no capital requirement. And day traders back then, they'd watch the tape, or they'd be in the brokerage office watching the prices flash up on the screen there. And this is like one of those kind of things. Now, whatever happens in the future, I think day trading this stuff could be profitable.
Well, I like that there are so many different vehicles now to do it, right? You have 11 ETPs. You also have the BITO, which is a futures product that's traded like a stock.
Mm-hmm.
So, and that correlates, it's gotten better. As I've been tracking this myself for a while now, it's correlating a lot better. So, this will definitely be a day trader's dream. I think day traders are already getting involved in this. And now that you have a lot of products out there, I think there'll probably be one or two products that become favorable. But I think, this is something that is definitely going to be something that day traders look at.
Yeah, for sure. Yeah, the stock Natomas eventually was bought by Diamond Shamrock in 1983. But during the go-go 60s, fortunes were won and lost on that stock, believe it or not. So,
oh, I believe it. I believe it. There's always equities out there that people will gravitate to. I mean, Kerry, not that long ago, GameStop and AMC were two of the hottest day trading equities around, right? So, I mean, we're just talking about last year. And, these meme names where who would ever think that, a stock like GameStop split adjusted would be $120. At that time was, before the split, over 500. I mean, it was just ridiculous. So you're going to get these equities. They've happened in the past. What has happened before will happen again. It's just the way it works.
All right. So, yeah. And the movie about GameStop, I can't remember the name of it, was really quite entertaining. I saw the premiere of it, really got a kick out of it.
Yeah, I have not watched that. They tell you that, somebody found an imbalance and, they were able to get the stock to create a massive short squeeze. But, Kerry, I'll tell you right now, from all the years I've been in this business, it's always the institutions behind everything.
Yeah,
so,
of course. And there was one big hedge fund guy who realized that with all the naked shorting out there, if you could get people to pour into a stock and drive it up beyond all reasonable levels, way beyond what the fundamentals justified, because basically GameStop is worthless, that you could blow out the shorts and make a fortune. Because as we know, when you buy a stock long, when you buy a stock long, your potential for profit is unlimited. But when you sell a stock short, your potential for losses is unlimited, right?
That's right, till zero. So, that's how it works. And
your profit is limited, but your losses are unlimited.
That's right.
Yeah, it was called Dumb Money, and it was a very simplistic kind of movie. Didn't really get into how markets work and what selling short is. It was basically selling short for dummies. But like you said, and we uncovered it. We found that one, we talked about it at the time, that one hedge fund guy who was behind the whole thing. And, you know, and then this guy, Wall Street Bets or whatever it was, you know, I can't remember his name. It was the cat. He was the
Yeah,
cat.
I don't know any of those characters. I know of them, but I don't know their exact names. But we did see, where these posts were going on the Reddit board, and then we'd see these enormous spikes and everything else. But, this was just going on 2 years ago. And, people seem to forget that this stuff has been going on forever. There's nothing new under the sun. There's always going to be some new mega short squeeze or something along those lines. How many times do we see some of these, so-called micro caps or penny stocks go higher by, 10, 11 points in a day, and then they come crashing back down and go to 30 cents. I mean, it happens almost every single day. It's not my game. It's not the game I play. I like to stick with quality companies that actually make money, even if I'm long or short, because I know that's where the big institutional crowd is. That's where the big institutional holders are, and that's where you're safest to be involved.
Mm-hmm. Oh, no, agreed. Agreed here. You can't go chasing those things, although I know somebody who made about $7 million on GameStop in a very short period of time. By the way, we're putting a link in the show notes to the Dumb Money movie link, and highly recommend everyone watch it because it's really entertaining. And the guy did make money. However it happened, I won't
there
speculate.
were fortunes made, and I will tell you there were a lot of people that didn't make fortunes that lost everything. So,
and Melvin Capital and Citadel, they got burned, and Stevie Cohn, he got burned as well, on the GameStopper.
Well, a lot of guys did get short a little bit too soon. They didn't, think it would go as high as it did. But I know a lot of small retail guys from, dealing with the retail investor that, bought this thing at its peak. And I'm not sure it could ever revisit that level again.
Yeah. All right. Well, that's it for today. And Nick will still be touching base time to time, but this is episode 666. And hey, we'll try to get together monthly, give a market update, and let you guys know where it's at. InTheMoneyStocks.com. The site will go on. Nick's partner is keeping the business going, so you can still get good information there. And Nick, hey, if you got a question for Nick, myself, just shoot me an email, kl@kerrylutz.com. Nick, the comments on the YouTube channel, I could see that there are a lot of people crying in their beer that you're retiring.
I really do appreciate all the nice comments, though, and that's a blessing and a testament to what we've been able to do here, Kerry. So thank you, and thank all the people for listening.
And these were people who said, "Hey, I've been in the trading room with Nick. He's been there for me." And, they only had good things to say about you, Nick.
Well, that's a great feeling to be able to, listen, I'm never going to be perfect in this business. Nobody is. You have to trade this business with a humble heart because it can fool anybody at any time. And that's what it's designed to do most often. So again, if I could leave with one thing to say to everybody is that learn the charts, learn these technicals, learn the chart patterns, learn the cycles that go on out here, because that's really what it takes to navigate these markets, because we're not insiders, we're outsiders, and that's the best information we're going to obtain.
All right. Well, we'll leave it at that, Nick, and good luck in your retirement. I hope it's a very short one and you're back doing your thing, but you never know.
Thank you, Kerry. I'm looking forward to retirement. Thank you so much.